Forex, crypto, and stock courses content. If it's the first time you are watching our video, let me tell you, this course has 7 chapters, and we already have started the chapter 1, which was about the money. But still, we are in the second chapter, and in this chapter, we are discussing about the Forex. So please don't forget subscribe to our channel. Now, let's start our today lesson. Chapter 2, Foreign Exchange. This chapter has 5 parts, and we are in the part 1. But we already have studied 2 lessons from part 1. The lesson 1, what was Forex and Forex history, and the second lesson, Forex characteristics. So already I have mentioned these 2 lessons links in the description below. And you can watch these 2 lessons by clicking on the mentioned link in the description below. So let's start our today lesson. So today we are on the third lesson. Lesson 3, how much Forex traders can make and what are Forex risks. So let's start our today lesson. Chapter 2, Lesson 3, Content. So today we will teach you the following. 1. How much Forex trader can make. 2nd, can we become millionaire or billionaire in Forex? 3. What are the most important Forex risks? So let's start from the part 1. How much Forex traders can make. The exact amount of money Forex expert traders make in a year depends on a variety of factors, such as their trading strategy, the amount of capital they are trading with, the markets they are trading in, and the amount of time they spend trading. Generally, successful professional traders are able to make anywhere from 7 to 13% return on their capital each year. Only the legendary and hyper-professional traders are able to make anywhere from 13 to 30% return on their capital each year. So if you are new in Forex or you are willing to start, so don't think that the Forex is the place that you can print money within a year. So don't think become billionaire or millionaire in a Forex trading is easy or it's a matter of weeks, months or year. No, it's not like that. It might take many years or even decades until you become a millionaire or a billionaire. The most important in this market is consistency and being patient. Second part, can we become a millionaire or billionaire in Forex? Yes, it is possible, but the number of active self-made billionaires in Forex is less than the number of your fingers up to date. Here are legendary billionaires or millionaires in Forex trading history that I am willing to introduce to you. 1. George Soros. Start trading 1969, in trading 2011. Initial capital that he had, it was $12,000. Within 42 years, he could make $20 billion. George Soros is a Hungarian-American billionaire investor and one of the world's most successful currency traders. He is best known for his famous short sale of 10 billion worth of British pounds in 1992, which earned him an estimated $1 billion profit in a single day. In total, Soros is estimated to have made over $20 billion in currency trading profit over the course of his career. George Soros has been actively trading the market for over 70 years. He began his career in 1974 as a clerk on the stock exchange floor in Budapest. In the 1950s, he moved to the United States and worked as a trader and analyst at various Wall Street firms. He eventually founded the Quantum Fund in 1973, which is now one of the world's most successful hedge funds. Second, Stanley Druckenmiller. Started trading in 1977, in trading in 2010. Initial capital that he had, it was $5,000. Within 33 years, he could make $2.5 billion. Stanley Druckenmiller is an American billionaire investor and currency trader. He is the founder of Duxin Capital, a hedge fund, and managed from 1981 to 2010. During this time, the Druckenmiller's currency trading strategy resulted in an estimated net worth of over $2.5 billion. Druckenmiller's career in the finance industry spans more than 40 years. Third, Richard Dennis. Started trading in 1975, in trading in 1988. Initial capital that he had, it was $1,600 borrowing money. Within 10 years, he could make $200 million. Richard Dennis began trading with a humble beginning, borrowing just $1,600 from his relatives to get started. It is likely that at that time, many people would not have expected him to become a millionaire. However, within 10 years, he did manage to turn this initial investment into $200 million, earning his rightful place among the greatest Forex traders in the world. According to his trading philosophy, two mandatory things in forex trading are discipline and consistency. Fourth, Michael Marcus started trading in 1971, in trading in 1988. Initial capital that he had, it was $30,000. Within 20 years, he could make $800 million. Michael Marcus is a legend among forex traders. Michael used compounding and turned $30,000 initial investment into $800 million in a matter of 20 years. One of his successful moves was to purchase the German marks during the Reagan presidency in 1980, when the German marks was highly undervalued. This turned out to be a smart investment, as from 1985 to 1987, the German currency made some significant gains against the US dollar, with Marcus earning millions of dollars in the process. So I've mentioned these four legendary forex traders that they started from very small amount of money, but it takes decades for them until they become millionaire or billionaire. You have to work hard for many years or many decades until you become millionaire or billionaire. But the most important things in this market is consistency and discipline. So by compounding the profit and consistency in the market and having a good discipline, so you will become a millionaire or a billionaire as well. But don't forget, the forex market is so risky as well. Even the very professional trader are losing money in this market, and in a small mistake they lost their capital. Part 3. What are most important forex risks? Are forex risks serious? The amount of risk associated with the forex trading is very serious, and it's important to understand the risk before entering into any trading activity. Forex trading can be highly risky and can lead to significant losses, especially if proper risk management techniques are not employed. Therefore, it's important to understand the risk involved and to always use sound money management practices when trading. Actually, I have heard from many traders, especially from beginner traders, they are always saying that if I could have a big capital, so I easily can make a big amount of money. But it's not like that. It's not depend to how much capital you have. If you are not enough expert, or if you do not have enough knowledge in this market, even if you have billions of dollars, you will lose in this market. If you lose $100, be sure you will lose $100 million as well. Even the very professional traders, they lose money in this market. So let me tell you about some big losses of financial institutions in this market, even though while they have more than hundreds of speculators and strategists and analysts, but still they can make a mistake. There are many multi-international banks and financial companies that lost a big amount of money in their forex trading, and even some of them went bankrupt. The banks which seriously lost in forex. 1. JP Morgan lost $2 billion in 2012 and lost $6 billion in 2013. So the JP Morgan lost $8 billion in 2 consecutive years. JP Morgan is an American multinational investment bank and financial services company based in New York City. It was founded in 1871 and has since grown to become one of the largest and most influential financial institutions in the world. It provides services in investment banking, asset management, private banking, and wealth management. Second, UBS Bank lost $2.3 billion in 2011, and UBS Bank lost $1.8 billion in 2008. UBS Group is a multinational investment bank and financial services company founded in 1862 and based in Switzerland. It maintains a presence in all major financial centers as the largest Swiss banking institutions and the largest private bank in the world. It provides services to private, corporate, and institutional clients in over 50 countries, with a focus on wealth management, investment banking, and asset management. Third, Societe Generale Bank lost $7.2 billion in 2008. Societe Generale Bank, known in English-speaking countries as a SocGen, is a French-based multinational financial services company founded in 1864, registered in downtown Paris, and headquartered nearby in La Défense. Fourth, Credit Suisse Bank lost $2.8 billion in 2011. Credit Suisse, a Swiss multinational financial services company headquartered in Zurich, Switzerland. It is one of the largest banks in Europe and the world's second largest wealth manager. So no matter if you are the biggest bank in the world or the biggest financial institutions in the world, but still you can lose money. So now imagine that if such types of big banks or financial institutions, that they are the first or second or third in the world, but still they lose money in spite of having hundreds of analysts, economists, and strategists, but still they can lose a big amount of money. So don't think that there is no risk in the Forex. Especially, I'm saying this to the beginner when you are coming new to this business, or it's the first time you're going to start this business. Take the Forex risk serious. What are important Forex risks? 1. Leverage risk. Leverage allows traders to open positions with a margin requirement, meaning that a small deposit can control a much larger total contract value. This can work in the favor of trader when the market moves in the right direction, but it can also amplify losses when the market moves against trader. Leverage always increases risk in the Forex market, but we will discuss the leverage risks in the separate lesson. Second, market volatility risk. Exchange rate can be highly fluctuating, meaning that even the smallest market movement can have a big impact on the value of currency. 3. Liquidity risk. The Forex market is highly liquid, but that doesn't mean that all currency are equally liquid. If a currency isn't actively traded, it can be difficult to convert into any other currency. 4. Interest rate risk. Interest rate change can have a big impact on exchange rate. If interest rates rise in one country and fall in another, then the currencies of those countries will move in opposite direction. 5. Political risk. Political events such as elections, referendums, and trade wars can have a big impact on exchange rates, that you cannot predict it always. 6. Counterparty risk. The counterparty to a transaction will not fulfill its obligation. This is especially a risk in Forex trading, where two parties enter into transactions without any third-party oversight. 7. Technology risk. Technology will fail or be hacked. This can be particular risk in Forex trading, as traders rely heavily on technology to execute transactions quickly and accurately. 8. Regulatory risk. Regulatory risk is the risk that regulations governing Forex trading will change, making it more difficult for traders to do business in certain countries. 9. Fraud risk. The trader will be the victim of fraud or will be taken advantage of by another party. 10. Exchange rate risk. Exchange rate risk is the risk that the exchange rate between two currencies will move against the trader's positions. These are the 10 important Forex risks that we have mentioned them briefly here. So in the coming lessons, we will discuss all of this in detail, and you will understand that and we will teach you how to keep yourself safe from these risks. So stay with us and subscribe to our channel to not miss the next lessons.